Hello, you're watching Oil and Gas Investor. In today's episode, natural gas prices continue to fall despite record gas withdrawals from storage. This allowed us to make a 50% gain on the KOLD ETF in just one day. Luck played a major role here, but this trade still deserves your like. Oil production and inventories, as well as refined product stocks in the United States, fell due to extreme cold weather. We also discuss how to make money in oil and gas markets next week. Let's start with the natural gas market. Forecasted warming in the second half of February and the recovery of gas production put pressure on prices. Over the past week, US natural gas prices collapsed by 21%. At Europe's largest gas hub, TTF, prices fell 8% week over week. In the last week of January, natural gas withdrawals from US storage reached an all-time record. However, over the next 3 weeks, the pace of withdrawals could decline by as much as 3 times. Let's look at our natural gas traffic light. All indicators point to further downside in US gas prices. We expect prices to fall below $3 per million British thermal units by the end of February. How can investors profit from this? We'll discuss it in our investment portfolio section. Now, let's move to the oil market. US-Iran talks reduced the geopolitical premium in oil prices. As a result, WTI fell 2.5% over the week. We still believe near-term oil price dynamics will depend primarily on developments around Iran. Weekly data also showed a decline in US oil production due to cold weather. In our view, this is a temporary effect, and production should recover within the next few weeks. The drop in commercial crude inventories is also unlikely to support oil prices. The same applies to the sharp decline in refined product inventories, which fell by 22 million barrels in 1 week. In the oil market, there is only one event investors are watching: a potential strike on Iran's Ayatollah regime. In our view, the most likely window for such an escalation would be the night from Friday to Saturday, February 13th to 14th. This timing would be optimal, as US financial markets will be closed on Monday, February 16th, due to the President's Day holiday. While uncertainty around Iran remains, let's move to our investment portfolio. Last Friday, before the market close, we bought the KOLD ETF, which rises when natural gas prices fall. In Monday, KOLD was up 49%, and we closed the position. Luck clearly played a role, but given our bearish gas outlook, we entered KOLD again this Friday, hoping for another strong move. Looking ahead to next week, several companies will report fourth quarter results. Among them are gas producer Antero Resources, as well as European energy giants BP and Total Energies. We believe Antero Resources could show positive stock performance after earnings. The company reports on Wednesday after the market close. If falling gas prices trigger a pullback in Antero shares, we plan to buy the stock, allocating 5% of the portfolio. This would be a short-term, speculative trade. Keep in mind that the second quarter is seasonally the weakest period for gas markets. Let's wrap up. We bought the KOLD ETF on Friday, expecting further downside in gas prices. If Antero Resources shares decline early next week, we plan to buy them at 5% of the portfolio, targeting a post-earnings rebound. If oil prices fall next week due to US-Iran negotiations, we will open a 5% long position in the USO ETF and potentially in select oil producers ahead of the long holiday weekend. Follow our short videos and subscribe to the channel to stay on top of the key developments in oil and gas markets. Leave the stocks you're interested in the comments, and we'll cover them in upcoming videos.